Oil prices fell over 4% to a three-week low yesterday. Benchmark Brent crude futures plunged by $1.7 to $39.5 per barrel during the session. Let's do a three-point analysis to find out what's the outlook on oil prices going forward from here. 1. What are the key reasons behind the sharp fall yesterday? Well, crude oil futures fell sharply to 2,811 rupees per barrel on October 28 as participants increased the short position as seen in the open interest. Now, crude oil prices declined due to a sharp build-up in US crude stockpiles, which offset the supply disruption caused by Tropical Storm Zeta. Also, US crude inventories expanded by 4.58 million barrels against the analyst expectations of a 1.1 million barrels decline for the week ended October 23rd. Now, oil prices were also hurt by the data showing a surge in the US production and also the waning prospects of global recovery amid the increasing COVID-19 cases in the US as well as in the Europe. Now, surging coronavirus infections in the US and Europe leading to renewed lockdowns also fanned fears that the unsteady economic recovery will further deteriorate. Now, oil prices were also hit by the fading prospects for a quick deal on US stimulus package and increasing oil output from Libya as well. 2. What should be your trading strategy on oil then? Well, Sri Ramaya, who is the senior research analyst at Reliance Securities, has told Moneycontrol that technically speaking, NYMEX WTI crude oil once again resumed its bearish trend, where it has given a breakdown below $38.5 levels and corrected more than 2%, indicating a strong bearish momentum in the coming sessions. Also, technically, MCX crude oil November has also given sharp fall from the 21 days moving average near 2940 rupees levels and trading with more than 3% losses, which actually signify further downside correction in the counter. Also, support of 200 days moving average placed at 2767 rupees, from where bounce back really can be expected in the coming sessions. 3. When will oil prices recover then? Well, the OPEC Plus group is set to relax the current collective cut of 7.7 million barrels per day to 5.8 million barrels per day beginning January next year. However, the second COVID-19 wave in Europe and United States is threatening economic as well as the demand recovery for oil and has also increased the market talk and maybe speculation about how OPEC Plus may not or should not increase oil supply at the beginning of next year. Now, global demand is currently not supportive for OPEC Plus easing of the oil production cuts in January 2021 for sure, and a number of uncertainties are putting downward pressure on oil demand forecast and also on the oil prices. So, experts believe a rebound, which was first expected in the last quarter of calendar year 20, will now get pushed to the second or the third quarter of 2021.